Hello, traders. It's 8:03 a.m. Chicago time. It's Thursday, the 29th of November, 2018. Here we are yet again on our little journey through the market. Before it opens, derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results, which is the nature of life, really. Past performance is not indicative of anything, really. This morning, seeing some a little bit of a pullback in equities after the rip roar day that we had yesterday on Fed's Powell's comments. The cable is the drag today. The cable is down about a 0.5% of 71 pips. The Nasdaq's also pulling back a little bit, down half a percent. The leader today is crude. Crude is moving after breaking lower yesterday. Actually, crude was a little bit crazy yesterday. Broke higher on the Fed on Powell's comments, and then it made new lows and broke out of a two-day balance after the gap down. Crude pushing through the bottom, and then this morning, a lot of chatter about stabilizing the market at the next OPEC meeting. A lot of comments from the Russian energy minister. So that's giving it a bit of a boost. It's back to where it's been trading for the last few days. So overall, crude is the leader, up 1.4%. The Euro stocks and the DAX follow. The Bund is higher. The bonds are higher. It's a mixed bag today in terms of risk allocation or risk sentiment. Some of the things, macro news that is out there. The Swiss and the Swedish economy showed a surprise contraction in Q3. And France revised their year-on-year reading lower in the second reading. This is a further indication potentially of contraction that's happening across the globe, starting back with China and so on. Also, some interesting moves out of the Spanish Treasury market, spiking up, behaving almost like the beginnings of the Italian BTP movement that we saw that's resulting in this disagreement between Italy and Europe. Anyway, this is not a news broadcast, but these are some of the things that are sitting out there. In case you missed it, Fed Chair Powell came out yesterday at 11 Central, noon Eastern, with prepared remarks that the policy rate was just below estimates of neutral, just below, which is quite bullish. It means there's a little bit more room to kind of slow down those interest rate hikes. Saw a great deal to like about the U.S. economy. No preset policy path, paying very close attention to data. These remarks contrast with his prior characterization in October when he said, "We are a long way from neutral at this point, probably." Okay, so we are just below neutral, which means that potentially these rate hikes are slowing down. I don't know if Fed's Powell is saving his job because of the heat he's getting from the president about these interest rate hikes. Of course, interest rate hikes don't bode well for a politician as they slow things down, costing jobs and things like that. So that's what's kind of pushing us around. Looking at the calendar today, we did just get half hour ago, we got the personal income PCE core and initial claims. And we have pending home sales at 10 Eastern, 9 Central. And other than that, we do have, well, we've had Fed Speaker Powell here speaking for the last half hour. But we also have the FOMC minutes. So you want to pay attention there at 2 o'clock Eastern, 1 Central. During that time, we have Fed Speaker Evans, Mester, and Harker, as well as Kashkari, Kaplan, and Rosengren, all speaking in Boston. No pre-release text. And at the same time, we have ECB Speaker Hernandez de Cos speaking at the same time. So pay attention to that 2 o'clock time period. Let's get into our review segment. That was a little longer than I like, but a lot going on there. So, um, review. Boom, boom. So this is the plan for yesterday. The plan for yesterday, the key idea was for the gap to be test higher and then for it to revert back and become responsive into the prior day's range. Looking for it to push back into 2676 or so before the bounce back out. Remember the day before we filled the gap zone, which is quite bullish. The gap zone that was put in on November 20th, about a week ago, Tuesday. What ended up happening is what ended up happening is actually scenario two played almost almost exactly to the tick. Scenario two expected a push down, a responsive selling spree into the prior day's high. The prior day's high is at 2684. What was yesterday's RTH low? 2684 and a quarter. Okay, and then we pulled back to what at the time was a low volume node stacked by VWAP, stacked by the mid, and a very prominent low volume node, which to me is a setup to get short with the move down. This happened after a large move down into that prior day's high plus a tick, and and then it pushed through. Okay, the fact that it did not push into the prior day's range makes it a danger for shorts, but still there's the setup. You take it. So it pushes through, and once it pushed through, now we're gunning for 2703.50, 2705, 2711, and 2722.75. That's the plan on scenario two. So once it pushes through, you get long and hold. Of course, the longs got a heck of a boost from Fed Chair Powell. That was kind of unexpected, and it ended up pushing through 2700, 2703.50, 2705, 2711, and 2722 very quickly, very quickly. We did pause at each one of those stock zones on the way up. Okay, so these stock zones that you see are updated, so they don't reflect yesterday's action. Remember, the action yesterday was 2705, 2705, 2711, 2722, and so on. So 2700 just blew right through, right? Little pause right here, little pause right in there. I don't know if you see it, right in here. And then it just pushes on, pushes through 2705, little pause at 2705, not much respect there. And then the next one up 2711, little pause at 2711, and then the next one up 2722, and 2722 held the chop. Basically, the flag was around 2722.75 in this area, and then it just pulled back and it pushed through to the next area, which would have been 2750. Now, if you don't remember what 2750 is, you need to go stand in the corner. So 2750, big area, major MCV POC. That's what stopped it at the top right here. Pull back, push through, pull back to that 2750 area before it continued higher. The next area up was 31, 35, and 2747, which is basically the high. So even though higher time frames were in control yesterday on that announcement, big impulse move up. I mean, that impulse, this move here was huge. It's 20 some odd points, 27.75, so almost 30 points on that move up on the Fed announcement. Flagged for quite some time. This is a bull flag here, right? So imagine that this is a pole and this is a flag. We expect it to break higher to continue the impulse. So that's what we got yesterday. I felt that the trade was very orderly. I was not on this, unfortunately. That would have really, even though the news feed was on point and we got it on time and everything else, and we heard the severity of it. and I just wasn't on it. So boo-hoo. So that's where we ended up yesterday. We ended up testing to 27.45, the mid-century figures at 27.50, and we had a naked point of control at 38.50, which is where we pulled back to on the close. And then after that, no, wrong chato. So there's some really intense buying here. Um, some things to point out that you may not have on your charts if you don't get these master levels. Just one second, my charts are very slow. Okay, so pay attention to here, here, and here. Okay, so this move created at 26.98 and a quarter all the way to 27.19 and a quarter LVN zone. Um, so what does this mean? This is basically a flagpole now. This is a string of singles that starts at 26.98 and a quarter and goes to 27.19 and a quarter. So what you have to pay attention to, at least if you look at the market as an auction, which I think you should, what you have to pay attention to is if the market gets into this area essentially acts like a gap. This basically is like a gap zone. This is really a truly untested, in the most recent auction, this is an untested zone. So as it pushes through, you'll want to pay attention to the fact that if you get long in this zone here, you are getting long in a previously rejected area. There's very little to support your long structurally all the way down to 26.98 and a quarter. Of course, 2700 is in the way, 2705 is in the way. Those are key areas as well. But just remember that we push through this, and it's going to behave like a gap zone. So we're going to look for a gap fill. And what is this number here, 2692? This is the SOC. This is the scene of the crime. This is the last print, 2692, using Bookmap to find to the microsecond the last print before the market started lifting with size. That print was 2692. This is where the auction was interrupted. It's called the scene of the crime, or the SOC. And essentially, the auction that was going on yesterday was interrupted at this price. So as we push through the gap, and if you're short into the gap, you're aiming for 26.98 and a quarter, and you're aiming for 26.92. That's how that plays. Remember, the issue is not that people can put on trades. People can put on trades. They'll gamble. The issue is that once they put on a trade, a whole different personality takes over their brain. The chimp paradox, the chimp mind. So I've talked a lot about this in the past, and this is not the forum for it. I need to keep this short, but this is the reason we keep track of the narrative, we keep track of context, we follow the story so that when it's time to execute, we are executing and holding, because we need to pay for our risk. We need to make up for our risk. Otherwise, we're just getting into trades almost randomly and holding for 3-4 ticks and then getting out. And then when we're losing 3, 4, 10, 20 points. And there's just no way to make a profit. I mean, consider any business. If your cost is 3, 4 times your profit, how long do you expect to be in business? You shouldn't. It's not economically beneficial to society. So what have we done in the overnight session? Burp, burp, burp. The overnight session has pretty good volume, a little higher than what we had yesterday, but the overnight session was completely balanced. This is a market that is waiting for the next move. We have drifted down, so what we have on a daily is on a higher time frame is basically, again, we pushed up, we flagged a little bit, pushed up, flagged a little bit, pushed up, and we have this big ass flag in the overnight session. And so as this dips, there's a higher and higher probability of buyers coming in and trying to buy lower prices, buy value, and continuing this move to the mid-century. So it's the overnight session is saying a couple things. One, we have a weak high in the overnight session right against yesterday's close. We opened, we touched the yesterday's close, and we've come off. We have a completely balanced Gaussian profile with a pretty tight value area in the overnight session. Very coiled market on a pretty decent volume. Okay, so what we have, and we are right in the middle of it. So look at the mid. Can you see the mid? It's kind of hidden in there because it's being overlapped by VWAP. It's being overlapped by the point of control. It's on top of the high singles from yesterday. This area here is just stacked. Is stacked quite heavily. A lot going on in this noise right here. So what this does is it creates a very difficult open, most likely. There's a lot of incentive given where it is. There's a lot of incentive for both sides to take their longs or take their shorts in this area because there's so much that can be argued from both sides. Those who seek lower prices are going to see these prices as a bear pop. This is a bear pop, right? This is or what they call a dead cat bounce or whatever. So they're going to see these prices as, wow, this has moved too far, too fast. Famous last words, too far, too fast. So I'm going to look to start building a short position, look to sell this. And those who missed the move up might see this as a consolidation of flag, an impulse up on a higher time frame, and looking for a continuation of 2751.50, the next target up, the mid-century and the low volume node above. So there are decent arguments for both sides depending on time frame, right? We're not all trading in the same time frame. So I know this is getting a little bit long here, but there's a lot that happened yesterday that we need to cover. What do we look like on the bigger picture? This is what we've done. We have shifted away from the gap that we had down here. We had a gap down here, and we one time frame, one time frame, one time frame, one time frame. Remember, I was looking for it to breach and break lower day before yesterday. It did not, and it put in a higher low, keeping the one time frame going. This helped catch some folks on their shorts, and we balanced in the morning, and then boom, we took off, and we have this double distribution profile, and we're back in this big zone here. What are we against? We are against the low volume, the key low volume node, again at 2751 and a half. Okay, the next key low volume node is down here, just below 2700, and we are in the region of the most accepted or highest traded prices by volume in the middle. And that's going to add to the fact that we are expecting chop here. So let's move on to our plan for the day. I'm sorry I have to do this, but I need to remind traders within convergent trading to please sign the consent form. If you have not signed it, you got an email yesterday afternoon telling you that you're a member who has not signed their consent form. To get Trade the News as part of your membership going forward, you should have access to it already. We've given you access for over a week now for free, and it's going to be a part of your membership starting Saturday. We need you to send this consent form in. This is an amazing deal to have this service included in your Convergent Trading membership for $69 a month. Membership, the webinars, the conversation, all that stuff included for $69 a month as we go through our beta still. Just an impeccable deal. Please don't miss out. If you do not sign this consent form, your subscription will not be renewed. Cannot renew it because we can't bill you without your consent. So there it is. So please get it done. You've received plenty of warning. Okay, so for today, what are we looking for in terms of the action? This morning, very tough call. We're in this really difficult area. Again, I'm going to outline it right here, this high volume area right here. We're right in that. We're right on top of this overnight point of control. We're right on top of the overnight mid VWAP. I'm expecting a wide open auction, um, in here that is expected to drift lower, and I'm looking for a spike higher. We have an incredibly weak high yesterday. Look at that high, just a ton of volume. We have an incredibly weak high, and I'm expecting it to pop from here. So that's scenario one. Scenario two, oh, I didn't plug in my laptop, so I might lose you here with the dead battery. Scenario two, an open auction again, tests higher, pushes through the high, puts in the higher high after the impulse, impulse is down, and then starts to move towards this 27 area right here, consolidates, and if it starts to drift, then we start to get into that 27.19 below that I warned you about. Okay, do not get long below 27.19 and a quarter. Without having some important areas to lean against. That's it for today. Good luck. I know there was a lot covered here and it's a long one. Good luck today. Mind your risk. Mind your risk. A lot of people have made really good money live in the last, as the volatility picked up, and have given a lot of that back over the last couple of days. So just be cautious. Pick your spots. Good luck today. Take care.